investing live stream brought to you by a rando graveyard where I could only find full bars. I don't know why I decided to do these when I'm out and about driving around, but I figured it would be fun to take a breath, a breather, long weekend, guys, enjoy it a little bit, and talk some stonks. I had a really good weekend because it was just my birthday today. Well, not today, but on the 21st there, folks. And I have to say, I got to say, the gifts were pretty on point. I don't know. I think shopping for an investor is the hardest thing in the world because you can't just do the Kanye West thing and buy somebody some Disney stock, though I'm sure they would appreciate it. I don't know how you transfer that around, or probably not the easiest thing in the world here, folks. But while people roll in, it is going to be a live Q&A. So if you guys have questions, I got answers, baby. That's what we're here for. Six-figure investing. Maybe I'll show you some of the gifts that I got because this is my favorite thing. I need to get like a shelf behind my studio at home so I can put some of this stuff up because whoever 3D printed this, oh God, I love this so much. Thoughts on Ethereum and are you buying these dips next week? Hey, you're paying attention. A lot of people have been paying attention to the charts here and they're thinking that Bitcoin is going to go back down to what is it, like 20,000, 24,000 if it breaks this resistance point. But I just bought Bitcoin yesterday at 36, watched it drop today down to 32. I am not aggressive right now. I am going to be probably buying a bit more because these price points are getting insanely attractive. But I don't want to make this purely a Bitcoin conversation here. A lot of people into the Ethereum. Maybe I'll have to buy some Ethereum. I haven't jumped into the Ethereum side of it yet. I'm kind of sticking with the pure play because I honestly think when the crypto burns out and people get bored of these 10,000 cryptos that probably aren't going to last the next couple of years, they're going to flood all that money back into the pillar, right? Like the top of the pillar, which is Bitcoin. But in other news too, check this out, guys. My little Wall Street bet coin. This is super cool. This is probably one of the coolest gifts that I got so far for my birthday, I have to say, because these are like special prints from the company that actually made the first original Bitcoin, like the real physical Bitcoin as a symbol. And that's like the symbol that we all see now is this company here. It's super cool. Slots on Tesla, man. Tesla, I'm probably going to buy a bit more. I think Apple has a bit more to drop. I'll answer your Apple question in a sec here too. Let me roll up my window because there's bikers here and they're kind of annoying. Yeah, there's like a Tim Hortons right across the road here. I had to park in the graveyard because I figured I'd be out of the way and less annoying. But when it comes to Tesla, man, I got a lot of it already. I was buying it a lot higher than I probably should have been, but I'll pick up the dips. I'll pick up the dips for sure. I'm hoping we see like a solid flush. I know a lot of people are frustrated when the markets drop like they are right now. Well, not the full markets, but these individual holdings that are a little bit more volatile. And honestly, guys, like if you're like me and you can think as long term as humanly possible, like, does this matter? Like these blimps, these 30%. I mean, let me put this in perspective. I know a lot of you might not be into the crypto side of it or the Bitcoin side of it, but I mean, if you look at like even Tesla stock, Bitcoin stock, I mean, Bitcoin stock, but when you just look at the volatility in the charts, guys, I mean, most people don't even realize that every year Bitcoin has done 5 times 20 to 30% price movements throughout the whole year. We've only seen 20 to 30% price movements twice in Bitcoin so far to the downside. And same like with Tesla, right? Like Tesla ran to like $900 a share. We're back down to like 500. And this is kind of a sweet point. I would honestly, like I said, if I'm hoping we get one more flush because I'm into these things for the next decade. Tesla doesn't get interesting. I know, graveyard. I know, buddy. It's such a weird place to park, but I got 5 bars sitting in this graveyard. I've been driving around for like an hour trying to find a place where I got full bars. And it's not just a graveyard. Like I said, Tim Hortons across the road. Canadian, if you know what the Timmy's is there. But yeah, I honestly, man, if you're in this for the long game, Tesla's not like a next 5-year play. Tesla's like a 2030 play. I don't think we see the full fruition come into play with Tesla for some time, and that's why like I always get frustrated when you see these things run up and up and up because like after a while it's just gonna burn out, and like I said, it's hard buying Tesla in the 900s, but down here it's a hell lot easier for sure. So I mean, I would be picking up the dips if you don't own any already. If you're like me, I got 18 shares, not as much as a lot of people do, I'm sure, but I'm cost averaging in. Same thing I'm doing with the crypto market and a bunch of other stuff, but I'm not being too aggressive there, guys, because I'm still a diehard dividend investor. And somebody asked the question already, like, what is the next growth stock or what are you looking for? And yeah, BABA is a great price. I know a lot of people buying BABA here if you can deal with the political rhetoric that we're kind of driving through in China, which, by the way, can I just put this out there? The media is more bullshit today. Literally, literal bullshit. Am I my little crypto bull? Literal bullshit than I've ever experienced ever. I mean, I'm becoming a part of this, so I'm recognizing it more and more now that I do blogs and I'm trying to find other approaches to diversifying my income just away from YouTube. But I realized that you can't even trust Forbes. And I watched Forbes come out with a headline and they changed it twice from the original headline, which means a lot of these people like they it's clickbait for money. And it's crazy that it's big institutions, guys, because I mean look at the crypto and China market. China didn't ban Bitcoin. They literally didn't ban it. They just don't want financial institutions selling. You can own Bitcoin, you can trade it with people there. It's not illegal to own. It's crazy how these headlines are so. We live in a world where we just look at headlines and we don't look any farther into things. And like I always find it interesting that like even when I see all these things about Elon, like people will write a mile-long blog about Elon Musk saying, this is terrible. He's going to be selling Bitcoin. We can see these huge sellout points. Tesla's getting rid of them, and it all comes off like one tweet that you could take in 20 different directions, right? In terms of dividend stocks, just add Pfizer. Got the vaccine today? Yes, sir. I got the Pfizer too. TELUS, British American Tobacco, all beautiful stocks. This is the problem here, right? Like I just bought Hydro One, but ain't nobody want to talk about Hydro One. But unfortunately, those are the companies that make you rich, guys. Like, and I'll answer that question there too with the VFV. Like I'm into index funds right now more than I am into buying individual stocks, and I haven't even bought any index funds. I just pay a lot of attention to them because to put it in perspective, we've been having a lot of arguments too because like look at the PE of the S&P 500 right now. The PE is over 40. How the hell is the S&P, like the VOO, have a PE over 40 when even Apple doesn't have a PE that's in the 40s? Like we were trying to wrap our heads around why the PE is going up so much, and I can only really equate it to companies reducing earnings, raising the PE. Like there's a few, I can't really tap my finger on it, but you're getting a better discount buying big tech giants like Facebook and Apple than you are actually buying the broader index. But I would still say in this market, guys, I'm still leaning to the cost average idea index funds and just dividend stocks because like I love talking about Tesla, I love buying Bitcoin, but it makes up such a tiny percentage of the overall weighting of my portfolio that I've been doing TikToks lately showing people's accounts that have blown up. Like I've watched people lose $50,000 in this market, and that was their entire savings. Actually, they lost more than that because they options, margin traded, et cetera, et cetera. It's so insane, guys. Like because you listen to people like me, you listen to like a lot of good investors that just hammer Bitcoin, crypto, Tesla, this, that, and that's all you think you need to own, but they're the dumbest stocks to own. I have to be honest. Tesla is not a good stock to own for 99% of people. Way too volatile. It's you're not going to be retiring off of it anytime soon, and it's friggin' hilarious watching these crypto investors look at their phone and be like, "Am I rich yet?" No, because crypto's not going to make you rich for next decade, guys. These things have to actually play out, right? And a lot, like even you guys in the comments, like Bitcoin or Ether, Ethereum. I don't, like I said, guys. I'm not actually as a crypto fanatic as probably I make myself out to be. I see the utility of it. And that's the problem is most people don't understand that like Bitcoin has a real utility to it that I think is better than PayPal. I think it's better than most wiring transfers from banks. And that's the utility that is going to drive Bitcoin into the future, which is why I don't care. I'm down on it. And that's why I was buying it yesterday at 36. And if it drops into the 20s, I'll definitely be buying it again because it's just a liquidity aspect of it. I use it like gold and silver. Like I said, guys, I'm not a big fan of gold or silver. It has its place in the world, though, and I buy it. I have some. I buy it as gifts for people. I think it's incredible, and I think it has its own purposeful utility behind it. It's a physical asset disconnected from the system, unlike Bitcoin that's disconnected from the system but has a real utility behind it that gold doesn't have. Like, all of these things play a purpose in your portfolio, so you always need to be looking at the broader view and not honing in on these, like when you watch these YouTubers that are like, I'm all in on Tesla or I'm all in on Bitcoin, like it's either this or not. Like even watching somebody like, this is an argumentative statement here too when you're talking about somebody like Andre Gic. I mean, he had like 800 grand, 900 grand in Bitcoin, and now he's down to like 500K, and he's a real bull on it. But he's like, hey, I've got enough investments that like I don't need to worry about it, guys. Like if Bitcoin goes to zero, like I'll be still able to retire with what I have invested, and even though it's a smaller percentage weighting. See that's I'm not that guy. There ain't no one investment in the world that will ever take up 50% of my portfolio, and I won't even freaking do it with real estate right now. Like it honestly scares me that people leverage everything they have into real estate. They save up that down payment. That's all the money they have in the world, and then they go all in on a piece of real estate for their family. Like that scares the shit out of me. Because I'm like, that's all you own is that one piece of real estate. Your entire financial future hinges on that piece of real estate. Like that, like I'm kind of more OCD, paranoid, kind of schizophrenic thing going on when I'm talking about my portfolio. Because like I am so, I am so about diversification and concentrating but diversifying. It's a challenging balance in one's portfolio because I mean I'm currency diversified. I own multiple currencies: gold, silver. I own Canadian dollars, U.S. dollars. I'm trying to find a way back into the China market, maybe with something like BABA. But you need to be exposed to multiple currencies because in a market like this, when the U.S. dollar deflated so much, I know a lot of you U.S. viewers, you don't see it hit your portfolio. You don't think about it. You're like, whatever, it's not a big deal. But when I'm a Canadian and I just watch the Canadian dollar go from 60 cents to over 80 cents against the greenback, the USD guys, that is a huge effing movement. If that is all you own is USDs and you weren't even diversified, I mean, you could have been picking up Canadian banks at discounts. You could have been buying some Canadian assets. Do you know how much you would have just made on the dollar conversion rate? Not only would have your, like, let's go back to 2020 here. If you bought the Canadian, like Bank of Nova Scotia, great example. Bank of Nova Scotia dropped massively, like 40-50% drop. I was picking it up. If you bought it at the same time I was buying it and you were a US person, guys, you would be up over 50% on that investment just on the capital gains. And then if you include the fact that the Canadian dollar went from 60 cents, 70 cents to over 80, you would have made another 15 or 20% gain just on the dollar conversion. And that is in a super stable foundational investment, right? Now, we're not going to get that lucky again, guys. We're not shooting fish in a barrel anymore. Those days have come and gone. It's a bloody shame. And I really hope a lot of people took advantage of the market downturn because I look at people like my girlfriend, people like some of my parents, and they got in at a great time, and I'm so glad they did. What's actually most excited about right now, that's the problem, man. There's not a lot to be excited about. If you want to buy BABA, I'm kind of excited about it, not enough to buy it, but like it's so bloody cheap. Guys, BABA does double the inventory shipment than Amazon does. They're literally doing double the volume of product than Amazon does, and they're trading at like half the valuation for some reason. And obviously there's a lot of political rhetoric that comes into play with this, but it's just that doesn't there's I haven't dug deep enough to be excited about it. If you're talking about like spec plays, like I used to be really into MindMed, but MindMed has done what I said it was going to do when I was buying it. And I thought that wasn't even going to happen until drug trials came into play. So that no longer excites me. The healthcare sector excites me a little bit. Not enough to pull the trigger. I've been stacking cash. You know what excites me right now is cash because I'm waiting for another shooting a fish in a barrel. I mean, what the hell was with 2020, guys? Like, you could have thrown money at anything. SPACs. I mean, I was day trading for the first time in my entire investing career, really. Did you see the ANVS move on Friday? No, I have not. Maybe you can clarify a little bit more because unfortunately I can't just flip over and take a look at some of the stocks or what you guys are talking about. But yeah, it's crazy to me, guys, that how easy it was to make money in the market last year. It was too easy and we all got too comfortable, and I'm hoping you got too comfortable because it's this balancing act of you don't want to be conservative when the markets are insanely silly. Like when things are just flying up and around and Bitcoin and crypto and SPACs and everything is just going to the moon, guys, that's when I got silly and I started swing trading and day trading. Like I said, I've done more trades like even at the beginning of this year than I have in a long time. But like taking advantage of that and just taking profit and mitigating it is insanely smart because that's what I did. And yeah, I got hit. I got hit hard. I mean, I bought SRAC. It dropped like more than 50% from where I bought it. I lost $5,000 on that trade, one of the worst trades I ever had. However, because I was silly during the market insanity, I made so much money. I mean, Tesla went to the friggin' moon. MindMed went to the friggin' moon. I was capping in over $50,000 in cap gains, right? Like that 1 year, my portfolio grew in 2020 by over six figures. So it's like, who cares that you pick that one bad investment when the whole cycle turns around, but you want to kind of be in it when you're in it. Alzheimer's drug, you say? Let me bring that up. That's an interesting topic, good sir. I don't want to lose that. Sorry, guys. Go back to my top chat. Bring that up. Where is that? ANVS had potential phase 2 results for Alzheimer's drug that ran from $25 to nearly 100. See, the pharmaceutical sector I don't touch with a 10-foot pole per se because you don't actually know what the outcomes of those drugs are going to be, and they can even show good phase 2 trials. Now, I haven't done enough homework to tell you anything about it. You have clearly done the homework. I have not. So if you know more about it, then definitely advise our group here in the chat. But when it comes to drugs, guys, like I don't like. See, this is why I haven't bought Pfizer. This is why I haven't bought a lot of like Merck and Company because Johnson and Johnson is the only real pharmaceutical company I'm super comfortable throwing an excessive amount of money into. I think I've got over 15, 20 grand sitting in Johnson and Johnson, and that's only because their products are foundational and they're going to be around forever. AbbVie, I'm still looking into, guys. Every time I look into these higher end, these other big pharma plays, they're all kind of relying on drugs that run out in the next 5 years. Like a lot of them, they're all trying out like they're buying like Botox drugs and all this stuff to try and mitigate the losses they're about to incur from, because as many of you may be aware, drugs have patents that last a limited amount of time. Usually it's like 7 years or something like that, I think. And when those drugs expire, they become open source, which means places like India, China, anywhere else in the world can take those drugs, remanufacture them for much cheaper rates, and distribute them. It's so weird how the drug cycle works. Anyways, I don't like that because like you can't understand the companies as well, and these companies are constantly hinged on coming up with new pharmaceuticals, and unfortunately that makes me extremely uncomfortable. So I don't like that. That's why I like Johnson and Johnson, because like they're so diversified. They do medical equipment. They do have a pharma sector. They own Tylenol, for Christ's sakes, and Tylenol is a staple. They own Band-Aids. Like it's just one of those companies that is like a diversified. It's almost like an ETF of a healthcare sector where like they're just going to keep doing okay, and there's no way that like one drug is going to hinder their like, because like with Pfizer, I think they're going to have a drug expire that's like makes up 30% or 40% of their income or something like that. Like you have to replace that, and it's a grind, and there's no exact like way of concrete future. And when I mean this, I'm talking about stability in one's portfolio, right? Like, I mean, look at something like a Pepsi. You're going to pay a huge premium for Pepsi. I think there's more discounts than something like a Pfizer, but with Pepsi, guys, like, people are going to keep eating chips. People are going to keep going out. So, I mean, like, it's the consumer discretion sector is like by far the safest because it's so undisruptible. But at the same time, you pay a huge effing premium for that. And something interesting about the consumer discretion is that those sectors of the market are largely owned by pension funds. Most people don't realize, like the Canadian pension fund, I think U.S. Social Security fund, like you can go in and actually see. Oh, sorry guys, you can actually go in and see what they own because they're managing like $1 trillion plus. Like it's freaking insane, and they own a lot of the consumer discretion. Like if you want a stable portfolio, go look at what the big funds buy and like the retirement funds buy, because at least your portfolio will never drop in half. Like that'll never happen in those funds. But when you look at some of the healthcare stocks and some of the other stocks, you realize they're a lot more volatile for the reasons that they're not owned from these big whales. But yeah, so anyways, like I said, I'm not nearly as excited as I once was about the market here, guys. If you could go back to March, the market of 2020, what dividend growth stock would you acquire that you missed out on? I have it. Oh my God, like don't even get me started. If there's one thing I learned about this crash, and if we don't see another crash for 5 years, at least I'm prepared for it this time, because what I would have done and what I was thinking, I actually did do this. I mean, I took out a lot more leverage than I ever have because I leveraged my line of credit. I don't want to do margin because you can get margin called, but with credit, you get a higher interest rate. But honestly, guys, with credit, there's no margin call. And if you're buying something you're comfortable with, yeah, Scott's Miracle Grow, SMG, I doubt. Guys, that makes me cry a little bit at night because it was the only MJ stock I recommended. I never bought it. Watched that thing run up like 300%. But if we're going back to March 2020, guys, I would have taken out about a $30,000 or $40,000 line of credit. I would have leveraged it into everything from like Home Depot, Scott's Miracle Grow. I would have just leveraged it across the market, right? Because I was I was so hesitant, guys, because I've never done it before. So I had a line of credit laying around, and I was looking at Ryokan, right? And at least I didn't screw that one up, because Ryokan, I watched it go down to $12 or $13 the one day, and I had my finger on the buy button with a line of credit, and I didn't do it. And I had to build up to it because I've never done that before, and I was really hesitant and kind of honestly uneasy about it. And then I just went all in on it. I took out like 10K from the line of credit. I threw it right into Ryokan at 15 bucks a share, and God, did that work out well. But if I had to do it again, I would have leveraged a lot more money, and I would have just paid it off over time, because like that was an opportunity of a lifetime. And I'm really, like I said, I'm sorry for anybody that missed that. I'm not trying to brag or be gloaty about it, but like I forced my girlfriend to open a trading account during that time. I bought my mom a lot of stocks. I went to town on my own stocks, and we did well. Like even if you bought real estate, guys, like you could have bought anything last year and doubled your money. Those days are gone, long gone. You have to take on way too much risk now to make those kind of returns because things are just valued in. There's no discounts anymore. Like it's a rarity. And if you are getting a discount, you're taking on more risk than you need to be taking on. Because let's be real, guys. In that crash, Scott's Miracle Grow was going to be fine. Home Depot was going to be fine. McDonald's was going to be fine. Why did they drop 30 or 40%? Like it was so easy to not miss that opportunity, right? So easy. But now it's like you look at something like a BABA and you're like, hell, that's trading at a discount. However, it's at a discount because political rhetoric, because the company's getting banned left, right, and center when they're trying to get into ant, bring that to the public. Like you start realizing like there's a whole lot of reasons companies trade at discounts, and this is the problem with high dividend paying stocks. I've been arguing this with a lot of people lately, and they don't seem to realize that buying a company that pays a 3% dividend yield that's reliable is going to be a lot better than buying some kind of option ETF that's paying out like an 8 or 10% yield. I got blinded in my early days of investing by high dividend yields, guys, and it's dumb. I mean, go look at GEO Group. GEO Group is the prime example of it doesn't matter how good your balance sheet is. Sometimes just rhetoric and the way people talk about the company can destroy it. And I mean, that's some of the fear. I don't think that'll ever happen with BABA. BABA's way too big of a company. But with the prison sector, I mean, it just got decimated. I mean, I couldn't get over it, guys. I held on to GEO Group, one of the worst losses I ever took. I mean, I was another five, or I was down over 50% on the position, and I cut my losses, buying it in the 20s, sold at the $9 range, and watched it drop down to $5. What a terrible, and it's funny too because that was one of the short squeeze discussions, because I remember Michael Burry added it to his buy list because they thought there would be a short squeeze because it was such an undervalued company. But again, like even Michael Burry, like what the hell is with this guy? Like everyone's going on about, oh my God, Michael Burry did this and he's pulling that, but he's wrong. Half the time he's wrong. I followed Michael Burry for the last like several months, and he's wrong more than 50% of the time. And the one time he's right, he shorts Tesla, and everyone's like, "Oh my God, Michael Burry's shorting Tesla. He's gonna be like, oh my God, Tesla dropped. He made all this money." It's like, yeah, but he was wrong several times in the last 3 months. That's why he like deleted his Twitter. The SEC was coming down on him. Like these guys aren't any smarter than you are. It does not take a genius to look at a GEO Group and be like, oh, this thing is undervalued, guys. The revenues are great, but that doesn't mean the stock's going to do well. No guarantees, right? Like that's not easy money. Seemed like easy money, but it wasn't easy money. Anyways, so questions, answers, guys. I'm going to just do this for about another 10, 20 minutes because I'm really terrified my phone might overheat here. I might have to turn my car back on. I just figured I'd do another one of these impromptu live streams because you people seem to enjoy it. I am not down in the city today where I was with my last impromptu, but I enjoy these. These are like stream of consciousness. I really wish I had a better background than this graveyard. Actually, I parked here too because this is where my grandmother's buried. And yeah, I just, there's so much traffic going on. Actually, for a lockdown, we're not in a lockdown anymore, guys. I don't know. I've been showing a lot of these pictures and videos of the lake where we live because people have been doing these private parties and the cops have been coming in and just shutting them down, like these big boat parties out on the lake, right? I don't know how you guys are doing in the U.S., but Canada is a freaking nightmare right now. Like the way the government's done this stuff, guys, it's scary. I'm just glad I got my first shot. First shot's out of the way, man. That makes me feel a lot better about life. I'm gonna just try and get the some cool air cranking here a little bit, guys, just to get my phone to cool down a little bit. It's like I'm holding it, just feeling it blazing, baby, on fire. But yeah, what else is going on with you guys? Like I said, there's nothing screaming by. I noticed one of you mentioned Disney. I'm not a Disney fan, to be honest. Disney does not get me excited because they're cyclical. I don't like cyclical companies, preferably. I mean, that was one of the things that kind of kept me on edge about Scott's Miracle-Gro because it's a cyclical company. Like it only does well seasonally, and then they go through dry periods. Actually, lately they haven't been going through any real dry periods because of the hydroponics, indoor growing. They've done really well off that acquisition that they did. But with Disney, however, I guess they did really well. I mean, okay, let's just put this into perspective. Disney, if you didn't think it was a risky stock, their entire company was saved by Disney Plus. I mean, go look at the revenue and minus out all the money they made, the hundreds of millions they've made from Disney Plus, and that company would have been a disaster if that wasn't their saving grace going into this pandemic. I've never been able to buy Disney purely because it's all cyclical. It's like video game companies, guys. Like you're only as good as your last bit of content, right? Like you're only as good as how many people are going to watch Star Wars. Like, so it's too hard for me to get excited about it. And it's the same problem with, I mean, look at video game companies. Like Call of Duty is one of these evergreen products. And finding evergreen cyclical products is hard. Like it's so hard. I mean, Call of Duty, I mean, I can't get over how many people still play it. It's like Fortnite, right? But I feel like eventually people get bored of that and they find the next thing, and then those companies have to re-innovate. And I don't want to be a part of that because I hate this. This is drug companies all over again. Really cyclical products, guys, are only popular for an extended period of time. It's not like Pepsi, where the products are going to be around for. Doritos have been around for like 100 years. I mean, like it's for long term. If we're talking about stable income, if you're looking for dividends. This is why my portfolio is heavily leveraged on things like utilities. I really love utilities. They're boring as hell, which makes me love them even more because no one talks about utilities. Yet I mean, even though we're heading into a place of renewability, and this is another reason that I bought Tesla too, right? And I'll talk about this in a sec. But what do you guys think of QQQC and HXD with the CAD dollar approaching? Yeah, I'll talk about some of the CAD dollar conversions with things like BFD as well. But like I try and buy speculative investments, and I talked about this with my boy Matt too. I'm trying to leverage my portfolio in a way where all of my speculations, my things like Tesla, my things like Bitcoin, are going to be a hedge against the foundational companies in my portfolio. I ask myself, what is the most foundational portfolio you can possibly build off dividend income? And what can you do to ensure that in the future, if something comes along and disrupts that, that you also own the disrupting technology that could potentially ruin those dividends? And when it comes to the utility sectors, guys, it is honestly Tesla. Tesla is making it so they want to partner with utilities and make it so your car, those battery power walls all sync into the grid. And it solves this great issue called the peaker plant problem. And I'm not going to get into this in this video because this could be an hour-long explanation in and of itself. But like, I want to own those disruptive companies that are going to disrupt my personal holdings that I'm kind of relying on to be stable into the future, right? So if Tesla thinks they're going to come along and disrupt a lot of the utility sector, I want to own a little piece of it. If Bitcoin thinks it's going to come along and disrupt my banking and the financial institutions, I definitely want to own a little bit of it, right? Like you kind of always want to make sure that 5-10% of your portfolio that's leveraged in higher risk is leveraged in a way that protects your foundational companies, because like Matt says, like look at Apple as an example, right? Like I don't think the iPhone is going anywhere for the next 50 years. I honestly think the only thing that's going to disrupt it is when we actually get to the level where we can start implanting things like neural nets into our brain and we can actually just think, hey, call my buddy, and the phone will just ring. That's when I think we get to a level of disruption with the iPhone. But for the time being, like it's going to be around, but you have to remember Apple's entire industry is hinged on the iPhone, the App Store, all of their income. And you have to ask yourself, what disrupts the iPhone? And it's a challenging question, right? But eventually something will come along. Electric cars, double grid demand. Yeah, I really think everyone should look into, like, not even just Tesla, because I think every car company is going to follow in Tesla's footsteps. And I mean, we just saw it too. I mean, go look at the Ford Lightning. It's basically it's literally a Cybertruck, but with no side-by-side specs. They do not want to show you the side-by-side specs, but they're going to do the same exact thing Tesla's doing. They're not dumb. I mean, eventually, once all these electric cars and batteries come into play, you're going to be plugging them into the grid. Your car is going to have a 99% use case, and your car is going to become more of an asset than a liability over time. That's the world we're headed to. That's the world I want to head to, obviously. But like, those are the companies you want to own, guys, that are going to make sure that if you're owning utilities, that you own the disruptor to the utility sector, that you own the disruptor to the financial sector, because these things, guys, they're not as concrete as people tell you they are. Like, banks can change. I mean, I look at something like Robinhood that wants to change the way clearinghouses work by using blockchain technology. I mean, blockchain is going to disrupt everything from the way you buy stocks to the way you're probably even transferring money around in banks. I would not be surprised sometime in the next maybe 10, 20 years. Things happen fast. It's crazy how things are happening so fast, and we're moving into a place of like hyper, I don't know how to explain it. I mean, my girlfriend were talking about this over the weekend. I feel like the way we consume things is becoming hyper. It's becoming more and more intense and condensed. Like, I mean, go back in time. Like, we watched Schindler's List a little while ago because my girlfriend never saw it. I had to make her watch it. Great movie. It really reminisces for me because it's where my family comes from, World War II, in the midst of that insanity. So it's kind of neat to reflect on. But that movie's like 3 hours long. And there's a lot of movies back in the day where you notice that they're not so hyper intensive. They're very methodically like thought out and very long and drawn out. But now we're like TikTok. Now we're like there's shorts coming out now like that are just boom, boom, boom. We just want it now. We want to get that fill and then move on to the next thing. The stock market's becoming a lot like this too. I mean, I made a prediction, and I wish I followed it a little bit more intensely, but I always said that if the markets crash, guys, they're going to rebound faster than they ever have. It's not going to be like '08 where it's going to take a year, because things are just becoming hyper intensive. Like, there's so much money out there now in the markets, and this is across the entire sector of the world, I think, not just, I think, media. I think the way we consume everything, and I think anything that is stuck behind in this is what Kathy Wood said, right? Like, if you are not disrupting or innovating, you are dead. Like, this is why most dividend stocks are going to be dead, and probably the next 30 to 40 years. I think these foundational companies are going to have issues because of this hyper intensity. Like, things are just changing so fast and so rapidly at a pace we can't keep up with. Like, I mean, think about how long it took them to get to the moon. And now we're going to be going back there to Mars, and that's going to be happening in the next decade, which is really hard to wrap your mind around. And then you got to go talk about all the other sectors when you're talking about AI. Like, do you know what AI is going to do to jobs? I just don't think people can truly appreciate it. AI is going to be the disruptor to drive-throughs, to literally drive self-driving cars, to the way like everything is going to work. Why do I start dancing when Bitcoin tanks? Back to the Bitcoin conversation. Yeah, no, it's crazy, guys. It's definitely crazy. I think the world's going to change in a lot faster in our lifetimes than even our parents' experience. And I mean, me and Matt are broken records about this. It just comes back to the point of the compound effect, right? Like, look at how long it took to come out with the first printer press. And then from the first printer press, I mean, how long did it take, even with steam engines, and from steam engines to cars, and then like from planes to like jets to like like all of that took like 30, 40, 50 plus years. Now, year over year, there's just new things coming out that are constantly changing at a rate that is just absurd, guys. Like, I mean, we're getting to a level now where we're going to genetically edit out cancer out of your body. And like I said, this is broken record. I repeat myself a lot about this, but I just don't think people truly appreciate it. In your lifetime, if you're in your 20s, early 30s, you're going to, even if you're in your 50s, probably you're going to see this. I mean, we're talking about the cure to cancer, colonizing Mars. This is stuff that people thought was a joke when we were a kid. Oh, they've always had a cure to cancer. And it's like, well, yeah, look into it. Really, it's a lot harder to cure than you think. But now, like, we're genetically modifying mosquitoes, for Christ's sakes. Like, they're testing genetic modification of bugs now to exterminate them. I mean, did you guys see that? Did you guys actually look into that? Like, that they're releasing 5 million mosquitoes. What is it, in Florida or something, that are genetically, they're males because males don't bite, and they've genetically altered them so they'll breed with females, but their offspring won't make it into adulthood. They're basically making a whole generation of mosquitoes imp through genetic modification, and they've done this already with animals. Like, they've genetically edited HIV out of animals. They're guys, like, we're heading into a place. This is another thing that I find interesting about healthcare, because Kathy Wood said the same thing. Like, healthcare is likely going to be probably competing for the top market capitalization companies in the world, because, like I said, when you can figure out how to, there was a lady that I watched that was trying to figure out how to genetically modify pig organs to be accepted into humans. Like, if you could just make one leap in healthcare, if you could just make one leap like that, like where all of a sudden we can actually get organs from like pigs, and you'll never need to be on a heart transplant list again. My uncle's on a lung transplant list right now, and even though you be on that list, there's no guarantee that your body grafts to the lungs, right? Like, if you can figure that shit out, guys, especially in the next 10 or 20 years, like, you were talking about extending life expectancy probably by another 10 or 20 years. Like, it's crazy. It's crazy, guys. Like, we're gonna see some crazy shit, right? Like, we're gonna see some real crazy shit. I'm excited for it. I'm super pumped because, like, it's just like watching a movie in real time. Like, you feel like you're living in a surreal reality. Especially the fact that you can invest into these companies makes it even crazier, even crazier. I notice my boys in here. I'm going to open up the top chat. I'm going to give you guys one more chance to do some question and answers period here. The average age of vehicles on the road is 11.9 years. That's a testament to how long a combustion engine will last. Well, I'd hope a combustion engine lasts longer than that. Actually, it's usually not the engine that breaks down. It's the car that breaks down because of rust and people just not maintaining them. I've been through several cars in my life already because of my past job, and I would never buy a new car because I know I would destroy it in the first few years because of the amount that I drive. But yeah, no, combustion engine guys are going to be around at least till 2030. But the transition to renewables is going to start, especially electric vehicles, will happen in the next, I'm going to say 3 to 5 years. That's when the big shift will start happening. The problem that I have is you need to get that value prospect, because it's hard for people to buy. It's really hard for people to spend $50,000 on a vehicle, because that's my problem, right? Like, people are like, ooh, Teslas are so great. It's like, they're not great just yet. And when I say they're not great just yet, like, yeah, their specs are amazing. The problem is they don't self-drive, and they're not charging or paying you to charge the grid yet. So they're not an asset yet. So if I spend $40,000 on a Tesla, yeah, it only cost me $6 to fill the tank, but I could also just buy a $5,000 beater like the one I'm driving, and the tank cost me $30 to fill, but I could fill that tank, 9,000 times before I even came close to the price of a brand new Tesla. Like, this car won't last that amount of tanks. So yeah, I noticed a lot of you are saying AT&T. I'll talk about that too. So would you say it's safer to buy dividend, folks? So I want to read that real quick. Sorry, guys. I really want to get to your questions here. Let me just bring this up real quick. Top chat. So thoughts. Let me answer the AT&T here first for Shamir. Thoughts on AT&T? Guys, I never bought TNT. I bought T.to, Telus Corp. I really like Telus Communications. I never understood AT&T. I just avoid it. It's a U.S. stock for you guys. It's not a Canadian stock for me. It's never tickled my fancy, and for a lot of reasons that we're seeing now, the management just did not do a good job. I think it'll be fine, but the management did a piss poor job of managing that last acquisition that they did. I feel like they made the acquisition for what was it, that streaming service, HBO or whatever, and I think they did it because they felt like it was the smart thing to do. There's a movie out. What's that? Or not a movie. There's a show called not Empire, but where they run a media empire, and it's really similar because it's like the dad wants to buy the old telecom or the television stations, and they want to buy like all these social media companies. But anyways, so would you say it's safer to buy a dividend focused ETF like VYM or SCG than individual stocks in case of most dividend stocks disappear slowly? It's always better to buy an index fund, and I'm going to tell you why. Index funds don't give a shit about how you feel about stocks. If you're buying the right index fund, it won't give a shit about the stocks that are in it because they're all based off market cap weightings and mathematical equations. They don't buy stocks off feelings. They weight them off market capitalization, right? So, I mean, this is the problem that most people have with weightings, and this is what me and Matt talk about, because Matt's like, you could buy the top 10 S&P companies, and it's very likely in the next 20 or 30 years, those won't be the top 10 companies anymore. However, if you're buying individual stocks that are the top 10 weightings, you got to pay attention to them. Because if they start falling off, or something like an AT&T where they're making really bad investment decisions, like, you might want to sell it. It might not be the best player anymore, right? Whereas the VOO or the S&P 500 index doesn't give a shit. They're just going to wait it out. Hey, if it starts losing market capitalization, it's just going to be dunked down the list. And anything that makes it to the top of the list, like Apple, is where all the money goes. And for as long as Apple keeps crushing and people keep buying into it, it's just going to stay up there. I mean, it's where all the money's going, right? So it's always better to buy an index fund. I don't care, unless you're like me, guys, or Matt, or you're sitting here full time doing stuff like this. Like, don't even. It's so hard to waste your time on individual stocks. It's a gamble almost if you're not willing to like pay attention to it. What's going on with Northland? I know the whole sector was tanking. And Northland Power just did a really big dilution period. I'm kind of a fan and not a fan of it. Northland Power is kind of like an aggressive growth play on the renewable sector. I think they want to be one of the biggest players in the field, and you're paying a hefty premium for it, but people didn't really understand why it dropped so much. And I looked into it, and they just did a massive purchase. It was like a multi-billion-dollar deal to purchase all the renewables going on in Spain. Like, they literally bought up some of the largest renewable plays in Spain. Everything wind to solar, and like, they're really pushing to globally diversify. I do not like the issues they've been having in the North Sea, because the North Sea was one of the initial projects that really launched that company off when I bought it several years ago. But now it's like they're really well diversified, but their projects, guys, are having issues with them, which kind of pisses me off a little bit, because like the North Sea has been driving down a lot of megawatt power production, and I don't know what the issue is, because it's obviously not coming from the it's not coming from like the power, like the wind generation, because Northland Power is the largest offshore wind producer in the entire world. Their primary focus has been offshore wind, and somehow the North Sea is one of the largest projects. Germany wants to be like 98% efficient power or something by 2025 or 2030. Like, they're really ambitious about natural energy, but it doesn't make sense why they're having issues. I feel like maybe there's a power problem with some of the plugs going under the ocean. I don't know what the deal is, but I'm kind of annoyed by it. But Northland's a great buy here, guys. If you're into the renewable sector and you're diversifying your portfolio of like, because for me personally, I own Northland Power for renewables, Southern Company, which does do renewables, nuclear. It's one of the largest utilities in the U.S. And then I buy Hydro One, because Hydro One is a Canadian utility that only runs the hydro lines. They don't do the power production. So it gives me this nice diversification list. But again, if you're buying these kind of companies instead of buying like an ETF, guys, you want to make sure you're paying attention to some of this stuff, because one bad management decision turns this stuff right into shit. And Matt's always throwing me money here. He needs to stop. He needs to stop throwing me money on tips. I'm just doing this for fun, and I'm really kind of annoyed because I'm using my data and I didn't switch over to my free data, but whatever. This is all for you guys. So anyways, what else we got? Any last questions here, guys? What's going on? You look fruity, bro. I'm getting warm. Actually, I could step outside and just get some air. Ooh, baby. God, I'm sweating. Yeah, so, yeah, guys. So other than that, I think we're just going to finish up here. We'll take it easy. I just wanted to cool off. But if I sit in here, it'll. But yeah, man, I lost everything, man. I lost it all. My guy. Oh, none of you can actually hear me. Hey, these things died. Lame. Sorry, guys. Not much I can do about it. I'm gonna get out of here.